Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 2nd, 2022. I hope all of you very best New Year 2022. So with that, let's talk about what stocks we can buy during the high inflation environment. As we all know, we are headed into high inflation environment in 2022. Let's talk about investing during the high inflation environment and talk about what asset class we do well in the high inflation environment. We talked about this one a little bit yesterday. We'll just quickly recap, then we'll jump into a short list of stocks that did well during the high inflation environment back in 2018. Then let's look at a list of stocks by sector, what do well and what may not do well. So with that, I am hoping this will give you a good idea of what sectors to invest and what stocks to buy. Many of you ask me, hey, what stocks should I buy? I'm a little bit worried about high inflation environment. So let's try to cover the topic here and go from there. As usual, please feel free to provide your feedback and we can make it even better as we go forward. So with that, let's jump in. So as you look through here, we have high inflation environment here. Back in 2018, as you can see here, we had four rate hikes starting from March, and then we got one more in June, and then in September, then finally one in December. And when the December rate hike happened, market fell down badly, and major averages tumbled big time. So now fast forward to 2021. Back in December 14th, basically Fed said they're going to hike the rates. There may be say 2 to 3 forecast of rate hikes in 2022. So we'll see what we can do here with this rate hike projection here from Fed. And also we have impending virus scare also. Let's see what will happen here and what stocks we can buy during these rate hikes. So if Fed increases about 3 rate hikes in 2022 and another 3 rate hikes in 2023, things may not look great. This is where we got to watch Fed a little bit carefully. I'm hoping Jay Powell will look at the data and look at the situation and be a little more careful this time, unlike last time where he went big time aggressively. So with that, let's jump in here and go into a little more detail. So, these are the sectors that typically do well during the high inflation. As you can look here, we got few areas like real estate typically does okay. We got basic material sector here like gold, copper, and so on and so forth. They also tend to hold up. Then you got consumer staples, which is steady Eddie, like all of you know. They also tend to do okay. Then you got healthcare. Healthcare is typically evergreen, a little more resistant to all this downturn here if you pick the right ones. And finally, we got utilities here. Think about heat, electricity, gas, and whatnot. And then we got some of these asset classes like crypto, fine art, and even selected tech stocks. We talked about this in detail yesterday. I'm going to quickly recap and jump into the list of stocks that we can buy here. And then what may not do well, as you can see here, we got industrials, high growth names, and some of the stocks with no pricing power. They tend to do poorly during the high inflation environment. So with that, let's jump in here and look at 2021 performance here. Probably we'll skip this one here and jump into what sectors will perform well during the high inflation. As you look through here, we got a few sectors. As you scan through this, keep your eye on 2018 here. 2018 was a high inflation environment. As you can look through here in 2018, we have consumer defensive, consumer discretionary here did well, and then you got XLV healthcare did pretty okay here, and then you got utilities also did pretty okay here. But otherwise, as you can see here, all other sectors were down, with S&P 500 down 6.2% in 2018, and also QQQ, which is Nasdaq, down 1%. And few areas like industrial took a big beating, as you can see here, along with financials. And we also have energy took a big beating here, as you can see. So now what we'll do is we'll look at what stocks we can buy. We know we are going to head into this high inflation environment. Let's see what stocks we can buy. So with that, let's jump in. All right, so let's go into the list of stocks that we can buy, during this environment. As you look through here, we got a list of stocks, selected list of stocks here that did well. So keep watching here at um, 2018. As you can see here, this is 2018. In 2018, all these stocks did nicely, as you can look here. And what I've done is I've selected a short list of stocks with the performance greater than 30% in 2018, which is a high inflation environment. And these stocks are selected from all sectors. As you can see here, we got all sectors represented. We can quickly walk through this and go into a little more detail in the following slides. So as you can scan through here, on the top we got Kirkland Lakes here, a gold stock, did nicely in 2018, as you can see here. And this year 2021, I mean last year 2021, it did not do well. Typically when stock does something like this, it typically does well in coming years, especially in the high inflation environment. And then you got Netflix. Netflix, as you all know, has got some pricing power. They can increase the price and people pay for it. That's why it's a good stock to own in case of a high inflation environment. People want to watch their Netflix no matter what. And also in 2021, Netflix did not do great, so that will give it some more ammunition to go and do well in 2022. And then we got Tulio here. Tulio, as you can see here, it was a new company back then, just the IPO. That's why it did super back in 2018 with Uber, Lyft, all these companies trying to use their services here. But in 2021, Tulio lagged the market big time, as you can see here. I think they might have a better luck in 2022, given folks will use their platform, even in the high inflation environment. So I think this stock can go higher in 2022. And then you got Lululemon. As you can see here, Lulu has done nicely in 2018 here, 54%. And 2021 was not a great year for Lulu, but this also can do well in the high inflation environment, as you can see in 2018. And there are a lot of folks who want to buy Lululemon yoga pants and their accessories. And then got Etsy here. Etsy, as you can see here in 2018, nice 132% performance here. And 2021, they did okay, but not great. This also can do well. There are a lot of people who got used to Etsy during 2020. They will keep using the Etsy as you go forward. And then you got Planet Fitness here. As you see here, Planet Fitness also did very nicely in 2018. And they had a little bit struggle in 2020 with the COVID, but they're trying to bounce back here. This also could be a good one as people want to do exercise. They might go into the physical place like Planet Fitness. And then we got here Five Below. It's again a retail play here with the clothes and low price merchandise here. This also did nicely. When there is a inflation issue worry, people try to shop in these type of discount stores here like Five Below here. I think this could be a good one heading into high inflation environment. It did very well in 2018, as you can see here. Then you got Church and Wait. Steady Eddie stock here did great in 2018, as you can see here. And this has been doing all along very nicely. Look at Church and Wait here. It had very good year all along. So it's a steady Eddie stock. I'd been watching this for a very, very long time. So you could buy this and hold it from there. It will do well. You will not lose your shirt here. And then got Mirachi here. It's again a biotech stock, as many of you know. Did great in 2018. Struggled a little bit in 2021. I think this also can bounce back in 2022. And then we got ILMN here. I like this one here. It's a basically medical device play, as many of you know. It's done great, as you can see here, with the exception of 2016 where it had a little bit downturn here. But in 2018, as you can see here, one 37% increase here during this high inflation environment. And 2021 was not a great year for ILMN here, but I'm sure they will do well as we go forward. And then you got Merck here. As you look at Merck here, it did great in 2018, 40%. And right now they're coming up with the COVID pills. And they've been lagging the market in 2021 here. I think this can also do very well as we go forward in 2022. Then you got Eli Lilly. Eli Lilly is one of my favorite stock here. Again, pharmaceutical company, as many of you know, they got a lot of great drugs and very good pipeline. And look here, 2018 they've done great, 40%. And even right now they're doing very well in 2021. Also, I think this is going to be a good one as we go forward. And then you got Boston Scientific, as you can see here. It's again a great stock, medical device play here. Look, they've done nice in 2018 here, 42%, and they lagged the market in 2020 here. 2021 was okay here. I think they can also do well. And then we got a few more here. We got Intuitive Surgical. As many of you know, this is again a medical device play. It's one of the great one for Da Vinci systems that they have for to assist the doctors to surgery. As you look here, 2018, no issue on the inflation worry here. Stock went higher. Even 2021 they did well. This is one of those steady eddy stocks which will keep chugging higher. I think it's a good one to own. And then you got AXON, again one of my favorite stock here. You might have known about the taser gun. This company initially started making taser gun. Now they're into body cams and all this security type, compliance type, um, equipments and devices and also software. So this is a great play here. Look, 2018, no inflation worry for this stock here, did great. Even now it's doing well. As you can see here in 2021 it did 26%. It's a good time to buy Axon. And then you got AMD here. As you look through AMD, great stock. I love AMD and the leadership with the Lisa Su. Look, 2018, 79% improvement here. Nice performance, no inflation worries at all here. And then you got Salesforce.com, Mark Benioff's company. I like this company. And as you can scan through here, 2018 inflation, don't care. It went higher nicely. And they've been doing not so great in 2021. I think they can bounce back nicely. And then we got Trade Desk here, again one of my favorite stock. Look, did nicely in 2018, 153%. And it's also doing okay in 2021. This could be a good one also. And finally, we got HubSpot here. I know many of you love HubSpot. These folks are also into CRM. Look, 2018, 88% performance here. Great performance. This has been a great juggernaut. Look, 2021 also great performance. I would be buying this company on any down pullback here and go from there. And then finally we got Coupa here. Coupa has been struggling this year, as many of you, last year, like many of you know here. Look, 2018 great performance here. 101%, great performance here. I'm a buyer of Coupa at these levels. I'm slowly accumulating. And then finally, we got a cyber security play here, Fortinet. Many of you know this company very well. Look, it's done great, 61% in high inflation environment in 2018, and continue to put great performance in 2021 also. It's got rock solid balance sheet, nice financials, nice growth. It's a great one from a cyber security perspective. So with that, this is a short list here. Feel free to look at this. And if you are starting your own portfolio, you want some multi-sector stocks, keep a look at these names here and buy them slowly. And I will also look at by sector what stocks you can buy, so you have a good idea what are the various stocks, what stocks do well in high inflation environment and what may not do well. So with that, now we just covered a summary here. Now we'll go into detail, look at sector by sector, what works and what may not work. With that, let's jump in here and look at our first sector. As you see here, our first sector is basic materials. Let's look at basic materials and see what worked in basic materials. And as usual, keep a watch on 2018 here. This is the high inflation environment that we will focus on and see what did well. As you see here, gold stock here, Kirkland Gold did nicely in high inflation environment. Great 69% improvement here in 2018. I think it just went IPO here. There is no mention of Kirkland in 2017, as you can see here. Still, it did well. As you can see here, it's struggling a little bit in 2021 here. It could be a good play. And also, I like Newmont Gold also here, even though performance is not great. It's down a little bit. It's also a solid player here. Look, it's done just 7% down, which is okay, not too bad here. And as you look through here, Air Product Partner, I know many of you like APD here. It's again a great solid play here. Look, they've done okay, not too much down in 2018. It's a solid company. You could buy some of these APD here, and they will also hold the value pretty nicely. Then as you scan through here, we got gold here, a barric gold. And I know many of you know a barric gold. It's one of those bigger gold play here. $32 billion market cap, as you can see here. This also held up pretty okay here with the 6.43% in negative in 2018. And it did not do well in 2021. As you can see here, I can see this also going higher. Then as we scan through here, we got Lindy, which is one of my favorite stock here. This also did pretty okay in 2018 here. High inflation environment, up 0.88% here. This is a great one to buy, and it will hold up the value pretty nicely. And then you got one of my favorite here, Ecolab. I know many of you know Ecolab here. Look, it's a great stock you could buy here. I don't see any negative here all the way to 2010 here. Look, high inflation environment, the stock went higher, as you can see here. And then you got few stocks that did not do well. As you look through your Albemarle, this did not do well in high inflation environment. As you see here, down 39%. Probably one of the biggest loser in 2018 here. And then you got few more like Nucor that did not do great. And you got your Vulcan and DuPont also did not do well during the high inflation environment. So that way you get a good idea here. So if you have to pick something, look at some of these winners here and go from there. And as usual, keep watching the winners here. I suggest just look at some of these winners. You could buy some Kirkland Gold. As you can see here, 69% improvement here. You could also look at other names which have not gone too bad down here, like APD also works here. You could look at gold, which is a barric gold, as many of you know, and you could look at Lindy and ECL, great place here. You could look at some of those, even Sherwin William. I like this one also. It's also a great play here. You could buy some Sherwin William also here. That also works. So with that, now let's jump in here and look at next sector. Next sector is communication. As many of you know, communication is a great sector to invest in. You got all these social media companies, gaming companies, to name a few here. And also we got some of these wireless carriers also. Look, we got Take-Two Interactive here, one of my favorite stock in the video gaming area. They held up pretty okay, as you can see here, down just 6.23%. I think not too bad at all. I think it's a great operator. I like the leadership here. I think it's a great company. You could buy some Take-Two. Look, they've not done great for in 2021. I could see a nice bounce back in in Take-Two Interactive in 2022. Given in the high inflation environment, they did pretty well. Then we got Activision Blizzard and EA. As you see here, they have not done great in the high inflation environment, but things can change. I like both these names here, but solid operator is Take-Two Interactive. As many of you know this company, I think it's a great gaming play here. You could go after the winner here and go from there. Look, even in 2021, I think Take-Two has done nicely here. And if you look at EA is also a solid player. You could look at that one too here. Activision Blizzard, I think they have some issues around some of these harassment type cases here. Culture at the top, so we'll see how it goes. But right now, I would say Take Two Interactive is a solid player. And then you got Disney here. Disney, as you can watch here, stock has done pretty okay in high inflation environment. Back in 2018, stock went higher, 3.6%. Stock has stalled in 2021, as you can see here. I can see the stock turning around nicely here, given they're down and they did well in the high inflation environment in 2018. Disney can do well. It's again reopening play. And then as you can scan through here, Netflix, which is one of my favorite stocks here. This will also do well. It's got pricing power. Look, 2018, no inflation worry here. Stock went higher anyways. And we got here Google. As you see here, Google is also good play here. I like Google. Look, it's done pretty okay here. In the high inflation environment, it just went down 0.8%. I would take that any time of the day here. It's a great play. And I like Meta or Facebook also. I think they have some issues back in 2018, not related to inflation. They got some challenges, but I think it's a solid operator. I would, even buy some Facebook as we go forward. And as you can scan through here, Pinterest was a newly minted company. Right now it's down big time. You could buy some Pinterest also here. That's also a solid operator. And Twitter, as you see here, Twitter went up in 2018 here. As you can scan through here, up 19%. And Twitter has been down this year, as you can see here, 2021, it's down. You could buy some Twitter also, given it's a beaten down stock, did well during high inflation environment. And then as you can scan through, we got Snap here. Snap, it just became IPO back in 2018, and they botched up the IPO big time, as many of you know here. That's why stock went down. But up here, I think it's a good buy. Stock is beaten down completely here. You could buy some Snap, but there are other solid players who have done well. You could buy them instead. And then we got Tulio here. We talked about Tulio a little bit earlier. Solid operator. Stock has been lagging the market. 2018 did superb here. This is just after the IPO, but I think this also can do well, given it's been lagging the market of late. And finally, we got our wireless carriers here with Verizon Wireless as well as AT&T. As you look here, Verizon is my choice here, solid player. AT&T has to clean up their act and do better here. I think Verizon is a solid play. They also give some good dividend and they got solid network. I would go with Verizon and probably don't go with AT&T at this time. Let them clean up their act here. So with that, that's a short list for you. As usual, keep watching the stocks that have done better in 2018. You keep focus on this column here. There are solid players here with the Take Two here, and we got Disney. You could look at that one too. Netflix, a great one here. Twitter, Tulio, and even Verizon. They all are solid operators. You could go after those and go from there. So with that, let's jump in here and look at Consumer Cyclical. Consumer Cyclical is one of my favorite plays as usual. They typically do nicely. Look, 2018, nice performance here. There are solid operators here, as you can see here. TJX, TJ Maxx, a lot of you know TJ Maxx very well. These folks do well. Look, they've done nicely. No red flag at all, nowhere. I think it's a good operator here. You could buy some TJX. People will buy discount clothing and discount accessories. I think that's a good one here. Next is Lululemon. It's again a great operator. They've been executing flawlessly, as many of you know here. And 2018 high inflation, Lulu did very well, as you can see here. Right now they're lagging the market a little bit in 2021. I think they'll do well. Then we got a few more here. Look, Nike. Nike is a good player. They also do well during high inflation. Look, nice 18% improvement in high inflation environment. Then you got a few more. I love all these plays here. We got Amazon, Etsy, as well as Planet Fitness. As you look here, they all did nicely in 2018. Solid performance here. Amazon at this time, it's a they've not done well in 2021. It's a solid play here. I would be a buyer of Amazon here, along with Etsy. Planet Fitness also, I think they will do well, given folks are returning back to the physical fitness places. I think it's a good one also. And then you got few more. As you look here, we got Ball Corp. Look, Ball Corp has done nicely in 2018. It's again a good play here. I think it's done well. No red flags at all. Nowhere. It's not done pretty well in 2021 here. It's again a good one to buy in the high inflation environment. And then you got few more here. We got McDonald's as well as Starbucks. Both are restaurant place, as many of you know here. They've done nicely in 2018 here. Look, positive performance in both these names here. You could buy them also. And then finally, we got Five Below as well as Booking.com. Both of them have done nice. I think they've done okay. I guess Five Below has done great, 54%. Booking.com is not bad either, just 0.88% down. So with that, if you look at the home builders here, they tell a different story here. As you see here, home builders, they struggled a little bit in 2018 high inflation environment, came down big time. Both of these are solid operators. Especially because they have gone up so much in 2018 here. I think we can be selective as they go down. I would say buy them and go from there. And then we got Home Depot here. Home Depot is also a good play here, along with Lowe's, as you can see here. Both have done pretty well in high inflation environment. You could look at that one also and buy them too. So with that, we look at our next category here, or a next sector, which is consumer defensive. So consumer defensive also did very well. As you can see here, consumer defensive held up pretty nicely for most part. So if you are to pick few stocks here, Boston Beer, Sam, it's again beaten down, as you all know here. I like this company. Look, down 47%, but in the high inflation environment back in 2018, stock had done great. I think it's a solid play here. And Coca-Cola is also a good one here. Look, in the high inflation environment, it did well here, went up 7.6%. It's again a solid operator. And then you got Pepsi here. Pepsi is again a great play here. They went down a little bit in high inflation environment, just 7.87%. But I think it's a great company. You could buy this one also. Relatively did well. On the other hand, Monster.com here, Monster Beer. This one came down, as you can see here. This is a little more, difficult to own during the high inflation environment, as you can see here. And then you got few more, Mandolese and Walmart. I think both are solid operators. I think you could buy these. They've held up pretty well, as you can see here. Down slightly. I would say if these stocks get hit, I would be a buyer of these names here. And then you got steady Eddie names. I love these names here. Look, all these discount stores here. They all do well. First two are the big box stores like Costco. Costco has done great, 9% in 2018. Target also had done nicely, 1.29%, and Dollar General has done great, as you can see here. As Dollar Store, I think they did not do well. I think they had some execution issues. Now they cleaned up their act. I think they should do well also. I think these names will do well as we go forward. If you don't have exposure, I suggest buy them on this any pullback and go from there. And then you got your Archer Daniel. I know many of you know this company. This company also did pretty okay in 2018 high inflation environment, along with Procter and Gamble. Again, a good one to play in the high inflation environment. And then you got few more operators here. Church and Dwight, we talked about it already. And even Estee Lauder, I think it's a great company. Look, this has done nicely here. It's a positive performance, 2.25%. It's also a good one here. And then you got Darling here. It's again Darling Ingredients. This one also did nicely in 2018 high inflation environment. You could buy this one also. And then you got a few more. I would not be talking about tobacco stocks here. I would shy away from those. And few of them which did not do well, like Monster here, Dollar Tree. I think they have some execution issue back then, and they're sorted out now. Colgate Palmolive also did not do well, as you can see here. Kimberly Clark is okay. It held up pretty okay. I think it's also a good one here. So with that, let's jump in here, look at our next sector and go from there. So next is energy. As many of you know, I'm not a huge fan of energy. Look, if you are an energy person, I would say look at this. Look at this chart here. Things are apparent here. If you just watch this, I love to watch this type of charts all day long. Look what's going on here. 2015, all these energy stocks went down. 2016, all of them went up. 2017 down slightly. 2018 down big time. This is a high inflation environment. And 2019 slightly up. It's really up down market. I think oil and fossil fuel is really for traders. I would say if you're a long-term investor, don't go after these oil names here and energy names. Look at other areas. This is good for traders. You could make some quick money. When they're down big time in 2020, you could buy some energy names. They will do well. See here, 2021, they did great. Same story. 2018 dropped off big time, came back up in a little bit in 2019. So it's a boom bust type market here in energy. If you're a serious long-term player, I would say avoid energy. But if you have to buy some energy stock, I would say look at the names like probably solid operator like Chevron, which is CVX. Chevron is a better operator here. You could look at names like Chevron, which I like very well. Even Continental is also a good player, and a few more like EOGs, again a good one. I like this one too. You could look at some names like this. Even One Oak is good one. You could look at some of the selective names and go after those and go from there. In general, oil is a little bit boom bust market. You got to be careful. Look, even Fang is okay here, Diamondback Energy. But after this humongous run here, I would not be buying up here. I will be waiting for a downturn here. After this solid, run here, they're going to give back their mojo in 2022. That's when you buy them when they're down big time, like what they've done in 2020 and 2018 and 2015. So with that, let's jump in here and look at our next sector. So our next sector is financials, as you can see here. Financials again a great sector here. As you look through it, 2018 financials did not do well in 2018 overall. But if you look through this carefully, the banks did not do well, but some of these fintech plays did pretty okay here. Look, we got Visa, Mastercard, PayPal, all fintech play here. They did pretty well in 2018. Look here, they've done pretty well. Even American Express did well. So that's why I'll be selective here. I would be buying these fintech names here, given they've done pretty well in 2018 here. And then you got CME Group, which is one of my favorite play here. These guys are into Chicago mercantile, into option trading type business here. They also did pretty solid in 2018. I think it's also a good one to buy. And our favorite Warren Buffett, Berkshire Hathaway, did also pretty well. I would go after those candidates here and go from there. And some names like JP Morgan as example, it's a solid operator. They just dropped a little bit in 2018, which is okay. You could still buy some JP Morgan here. I'm sure they will also do well. Along with American Express, they will also do nicely. So with that, that's the quick financials here. You could look at some of these names and prepare yourself as usual. Keep watching how they have done in 2018 and go after the solid place that will do well. Hopefully, they will also do well in 2022. So with that, now let's look at next sector here, which is healthcare. I love healthcare. It's a great sector, evergreen. Look, 2018 came along, and healthcare stocks for most part held up nicely. Look, we got Vertex, which is one of my favorite stock here. Did nicely in 2018, as you can see here. Right now they're struggling. I think it's a good one. I'm sure they will go do well. And then you got Regeneron, again one of my favorite stock here. Look, Regeneron also did pretty nicely in 2018, just down 0.65%, as you can see here. I think it's a solid play also. And then you got a few more here. We got Biomarin, which is one of my favorite stock here. They also did pretty okay, down slightly, but that's okay. Solid operator here. And the stocks that went higher, we got GBT here. I think this one is a little speculative. I would say if you're a serious investor, you can don't need to buy this one here. It's a very speculative play here. I would. It's a good trading stock, but not long-term investing. And then you got MRTX. It's a solid operator. You could buy some of this stock also. They are down, lagging the market in 2021, as you can see here. And then we got my favorites here. We got Thermo Fisher, Danaher, ILMN. All these are medical device and life science type play here. Look, they've done nicely. There is no fear of inflation here. Even exact sciences, they've done nicely here. I would say go after these names. Buy those names here. And then finally, we got Johnson and Johnson's rock solid balance sheet, as many of you know here. You could buy this one also. They're down slightly in 2018 here. I think they will do well. And finally, we got both Merck and Pfizer. Both are pharmaceutical companies here. Look, nice performance here. Folks have to buy their drugs, and medicines. They will also do nicely. You could look at those names here and buy them too. So with that, let's look at our next sector here. Next sector is again healthcare continued. As you look through here, look 2018. Keep watching this year. We got some solid operators here. I like AbbVie, Amgen. Look at Lilly here. They kind of did nicely here. Even up here, I love Lilly. You could buy some Lilly. They will do nicely. And then you got a few more here. We got ZTS. It's again a solid operator here with a lot of people doing the pet care, buying pets and taking care of pets. This can also do well here. Look, nice performance in 2018 here. And then you got a few more here on the insurance type plays here with the Anthem, CVS, CI, and all this as you can scan through here. For most part, they've done well here. Look, the top two here, United Health and Anthem, they did well here. You could go after these candidates here. United Health is a great company. You could go after that one as well as Anthem. And then we got few more. Look, Abbott Labs, which is one of my favorite stocks here. There are a lot of great medical devices and also COVID testing. Look, they've done nicely in 2018 here. They can also do well going forward. And all these names, now we got our medical device names here. Medtronic, Strycler, BSX, BDX, ISRG, all solid operators. Keep watching here. 2018, no worry of inflation here. And off late, Medtronics is struggling, as you can see here. I'm sure they will do very well. The moment you see a company struggling like this, typically they will follow that up with a nice execution, nice performance. I'm sure that will happen for Medtronic also here. The other players are solid players, as you can see here. You could go after those and go from there. So with that, we look at our next sector here. So next sector is industrials, as you can see here. In the industrials, keep watching. This segment struggled hard in inflation environment, but there are some good winners here. On the winning side here, look, we got Boeing as well as Axon here. Axon is my favorite. Axon had done great in 2018. No fear of inflation. Boeing also did pretty okay here. Boeing was a different company back then. They used to fire in all the cylinders a while ago, but now Boeing is struggling. Boeing, I think you can buy on a downtick here and a long-term play, but Axon is a steady Eddie stock here. They will do nicely. And then as you can scan through here, we got a few more operators here. United Airline, it's one of the good operator. They also did pretty okay here. 2018, it's done nicely here. Now we got a different environment with the COVID scare, but on a down day, you could buy some United Health. But you don't expect a solid performance in stocks like United Health because they're hostage to a lot of issues like COVID and such. And then you got Trex here. Trex is solid operator here. A lot of people want to replace their wooden deck. It's a solid operator. Look, they've done nicely. You could still buy some Trek. They have done nicely for most of the years, as you can see here. Then you got a few more here. We got as you can scan through. Keep watching 2018 here. Let's go after the winning plays here, like CAX, NSE, and even UNP. These are some of my favorite stock here. You could look at these operators like CAX has done nicely, 0.84%. Even now they're doing okay, lagging in the market a little bit. But other two here, NSC and UNP, both railroad companies, as you know, they're solid operators. You could buy them. They've done nicely in the high inflation environment. And then we got here Generac. Generac is a solid play here. They've done nicely in high inflation environment. I think they will continue to do well here. And finally, we got Honeywell. They did not do great, as you can see here. And we got ADP, which is one of my favorite plays here. They will do well. It's a very, very steady AD company. You could buy some ADP and they will do nicely. So with that, some of the losers, you could go through them here. Some of the big losers here. FedEx lost big time, and even JB Hunt lost big time here, along with the MMM, which is Triple M here, as well as we got Lockheed Martin, Northrop. They also did not do great here. Just keep that in mind as you look at these names here. So with that, let's jump in here and look at our next sector. Next sector is real estate. As you look through this sector here, keep watching 2018 here. There are some players who did nicely in 2018, like Welltower. It's a very well managed company. You could look at buying this company also. It's done well in 2021. You could buy this one. It's a good play here. And then you got your PSA public storage. It's again a good one. You could buy this one also, done nicely in 2018. As you can see here, 0.6% up. And we got a few more operators here, EQR, Avalon Bay, SPG, all did okay in 2018. No fear of inflation. As you can see here, they have done, all of these have done nicely in 2018 here. And then you got a few more, as you can see here, Simon Properties and O is one of my favorite. O keeps delivering every time without fail. And all these plays will work here. Look, all nice performance here. And O is extremely well if you are a retiree or approaching retirement, or even if you want a consistent income. I would say buy some O. It will keep on delivering, giving some good dividends. And finally, we got Equinix here. It's a data center REIT, as many of you know here. It did not do great in the high inflation environment here. I think it's a well-run company, but if this stock comes down, you could buy some. So with that, let's look at our next sector and go from there. Next is technology. I love technology. I know many of you love technology here. Keep watching 2018 here. And I think there are some companies who have done great here. Look at IBM. IBM is a different company now. 2018, it's done nicely, but now I think we have new leadership. I would not be holding my breath on IBM here. This company historically struggled a little bit. Look at the performance here, up and down. I would probably discount IBM here, but I would look at names like Cisco here. Cisco is a solid operator. Now they're getting the groove back, as many of you have noticed. Nice performance in 2018 here, 16%. I would also look at FIS here, Fidelity. It's a great operator. It's up 12% in high inflation environment, solid operator here. And then you got Fiserv, again, one of my favorite company, did nicely in 2018 here. You could buy this one also. And keep watching here. We got a few more names here. Intel. Intel is a different company now. I think with the new leadership, this can turn around. So look, they've done pretty okay in 2017 here. I mean, 2018, you could buy some Intel. It's lagging in the market right now. I'm sure Pat Gelsinger will fix the company as we go forward. And then you can look at the company that have not gone down so much, like ADI is a good play here. You could buy that one also. And TXN is a good one here. You could buy TXN, Texas Instruments also here. That's a solid operator. And look, if you scan through here, we got some of these semiconductor plays like Applied Material, Lam Research. All these names have not done well in the high inflation environment. Keep a watch on that. Keep a note of that. And even Nvidia has not done great in the high inflation environment, but Nvidia is a different company now. Look, Nvidia down 30% in the high inflation environment, but it's a different company now. Qualcomm also down. keep that in mind as you walk through. If you want some solid operator with the proven 2018 high inflation environment, look for the winners here and look at the stocks that have gone slightly down, and invest in those names here. And stocks like Nvidia, Avago, you could look at solid players here. I would say, go after stock like Avago here, or Broadcom. Broadcom, as you see here, just down 0.1%. That's a solid operator. You could go with the Broadcom here. That's a good one. You could buy that one here. And also, you could look at ADI. Also, it's also a solid operator. You could go after that one too. So with that, let's look at our next list here. It's the technology continuation. As you look through here, we are continuing the technology area. Keep watching 2018 here. Look, there are a lot of solid operators. Inflation, no worry. Look, AMD, one of my favorite, did nicely in the high inflation environment, and 79%. And then we got a few more here: CRM, Intuit. All these names work nicely here in the high inflation environment. You could buy these names also. Nice performance in 2018 here. They are all solid players. And keep watching. Even Oracle, did slightly down here. It's a solid operator. Right now, Oracle is struggling a little bit. I think it's a good one. They bought Cerner, as many of you know here. Solid operator. I would buy some Oracle also here. And look, a few more: Fortinet, Rockstar here. They've done nicely. And even Qualys is again it's a cyber security play, great company here. On the other hand, Solar Edge, I think it's a better operator here, down slightly 6%. I would be buying some Solar Edge also here, given they've underperformed in the market in 2021. That's a solid play here. Whereas First Solar went down big time, as you can see here. It's also struggling now, but I think Solar Edge could be better operator here, and you could buy that one here. So with that, let's jump in and look at our next segment here. Next and last segment is utilities. As you see here, utilities generally they are doing pretty well in the high inflation environment, with the exception of Dominion. I think they had some challenges last time, but now they fixed the issues. I think this should do well this time around. Otherwise, look here, all these operators are doing well here. I would say go after stocks like EXE, Sempra. Look, next era is one of my favorite here. Nice, up nice 11%. You could go after that one too. Even EXE, Exelon is a great play here. Look, up nicely 14% in the high inflation environment. And all these players are good here. AEP and Excel did nicely, as you can see here, in the high inflation environment. And operator like AWK, I like American Waterwork here. It's a great company. You could buy that one also. It will also do well in the high inflation environment. So with that, I think probably that should be the wrap. Let's see here. All right, so you might wonder, what should I do? I got some cheat sheet for you. I've talked about this already. I'll just flash it for you to take a quick look at this. Keep some of these things in your mind and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.